He is a consultant for distressed farm borrowers and publishes Touch the Soil magazine for consumers seeking environmentally sound, healthy food sources. He is also an advisor to the American Monetary Institute. Where are you, Ben? Okay.
While it's warming up, just a couple of statements about my background so you'll understand a little bit where I'm coming from. I'm not sure I have answers to all the problems that I'm going to toss out, but the last 8 years I've been in the most incredible dogfights with attorneys and lenders, trying to fight for what I believe was America's best, and I stood next to them as they were taken to the mat. I won't have a chance to talk about all the stories. We'll cover some of them, and then in that we will uncover some of the abuses that are taking place in rural America and some of the problems that were there. So I think I'm just about ready, and we'll get started. We publish Touch the Soil, which is a bi-monthly publication on the changing future of food. It has a huge economic piece. We have free copies on the back. Any of you who would like to subscribe while you're here, we have some free past issues, a nice little tote bag, and my wife Susan will take your orders there. All right, let me see if my clicker works here. Chaos in rural America. The burning grain field. Low commodity prices often force farmers to make tough choices. One of those choices is not to purchase crop insurance. This can often be the straw that broke the camel's back. When crop insurance is not purchased due to economic hardship caused by low commodity prices, generally the unexpected lands on the farmer's doorstep. Here's a picture of a grain field that caught on fire while going to harvest. You can even see the poor farmer's pickup in the middle there, running back and forth in chaos, wondering what's going to happen. Is there a relationship between low commodity prices and monetary policy? Certainly there are other relationships besides monetary policy, but today we'll talk about those relationships. And then afterwards, there are other relationships, but we could talk those privately afterwards if anyone has a question. Negative monetary policy, negative farm economics. You know, I might take that hand mic if somebody's...
Pretty hard to get that mic to come on.
Okay.
There you go.
A little perspective, Idaho is just a microcosm of the larger economic landscape in the United States. In the mid-'80s, there were 2,000 potato growers in Idaho. Today, there's less than 350. I know many of these individuals who have purchased the small farms and have grown. They've grown with mostly with credit. And even though we like to pick on large corporate farms, most of the large corporate farms are so heavily indebted, they're just teeter-tottering and ready to tip over. Here's a case sample of a client that we worked for. He came to us in December of 2002. He had $14 million in assets, $9 million in liabilities, and a net worth of $5 million. There's no way he could pay the $9 million. After 2.5 years of difficult negotiations, lender blunders, and everything else that you can imagine in between, it was agreed that Milt would sell everything. His farm was decreasing in price on average of 10 to 15% a year. And when we finally struck a deal with the lenders, he had a negative net worth of $3 million. And that's what we agreed upon. If you just walk away from this $3 million, we'll sell everything. So that was the deal that was cut. But Milt now, because of his assets had raised in value, is facing close to $1 million in tax liability, and he'll be facing Uncle Sam when January or April 2006 comes around. Same with the grain growers. There used to be 2,300 members of the Grain Growers of Idaho. They're down to 800. This next one is an astonishing numbers. Potatoes have to be raised in an isolated area because they're disease prone. The nation's largest seed potato growing areas is in Ashton, Idaho. They used to have 52 growers. They're now down to 6 of any consequence or size. Here's the perspective. At its peak in 1935, America had 6.8 million farms. Today it has 2.1 million farms. Conventional farming is very capital intensive, and as a general rule, a huge user of credit. Juggling large volumes of credit, increasing interest rates as an anti-inflationary tool targets farm borrowers for financial punishment, a cost contributing to declining farm numbers. Again, Striving for a strong dollar through increases in interest rates raises the value of the American dollar relative to other currencies. This damages the farmer twice in the marketplace. First, it makes the American products too expensive to export, and I might mention that 30% of American agricultural production is exported. And secondly, it incents cheap imports to take away the markets he even has locally. Millions of American family farms and American workers have been punished for inflation through higher interest rates and loss of market jobs to overseas from strong dollar policies. The prolific use of a one-size-fits-all policy means that a growing number of government agencies, business enterprises, and individuals not contributing to inflation are being punished for its correction. We've all had different numbers, and I will have some sheets afterwards where I got these debt aggregates. Total bank loans, total bond debt, total national debt not publicly traded. And so when someone walks up to the switch and says, hey, we need to fight inflation, we're going to raise the interest rate, it's basically transferring wealth from the debtors to the creditors. It takes 400 gallons of oil equivalent each year to produce the food necessary for one America. Escalating interest costs in the face of punishing oil prices has rural America again exporting its equity. Rural America is again being punished for inflation when much of it is not contributing to inflation. I used to be the chief approval officer for one of the largest agricultural banks in the United States. I would get to my desk in the morning and there'd be $20 or $30 million worth of approvals there. What we did is we tracked the applications that came in as to their creditworthiness. We tracked working capital, net worth, equity, earnings, collateral coverage for 3 years on every application that came in. And here's the outcome. There wasn't 1 year out of those 3 years that the fundamentals didn't deteriorate materially. That means it wasn't because a farmer was bad in business or that they were bad people or whatever explanation we have for somebody that we're kicking. This was a broader economic event unfolding. Incidentally, prime rate has been raised 11 times since last June, 0.25% each time. So the cost for a farm borrower from a year ago is up 70% if he's pegged to a prime rate loan. We used to have come to our administrative offices when I was still in the banking business. This was after the fall of the Iron Curtain. We used to have foreign bankers come in and learn the capitalistic system of banking. And one day, one of my friends and this Russian banker that had spent some time with myself learning how we approved agricultural credits, we went to lunch. And so the banker, while we were going, he said, Ben, tell me about capitalism. And my friends that were with us said, oh, geez, what's Ben going to say? So I asked him, I said, do you understand chaos? He goes, well, what do you mean? I said, nuts, crazy? And he says, yeah. I said, well, if you understand that, you'll understand capitalism. Now, just so you don't think I'm a kind of the lone person out here talking, our friend Alan Greenspan agrees. In a speech to the American Economic Association in January of 2004, he says, the Federal Reserve experiences over the past 2 decades make it clear that uncertainty is not just a pervasive feature of the monetary landscape, it is the defining characteristic of that landscape. This was an unusual circumstance I got in. The Federal Reserve, in a very rare event, came to a little town, Pocatello, Idaho, to do a public relations presentation. And they had a couple of senior officers from the Salt Lake Fed, and they brought in one of the top economists from the 12th District out of San Francisco. This was in 2003. After the date of the presentation, the Fed, in admission that the economy was still doing bad, made 2 more interest rate concessions. But the economist that they sent up came to Pocatello. It was the Chamber of Commerce that hosted it, and you had shopkeepers, bankers, lawyers. You had the cross-section of the town in terms of the business perspective that had really been thrashed over the previous 2 or 3 years. And this economist had the audacity to come in and tell these people that everything was on the mend. His problem is when he said, I'd like to see by a show of hands here now, who believes that we're on the road to prosperity. He didn't get one affirmative. The whole audience was blank, and there was about 150 people there. He turned beet red, he finished his presentation, and everybody just hiked out. So afterwards, I went up to him and I said, you know, mister, I don't think they pay you enough to come here and give us this party line. And his eyes got real big, and then there was a senior officer from the Salt Lake Fed, and this woman was there, and I said, lady, why don't you come over here? I want to talk to you two for just a sec. So when I had him standing there, I said, you know, over the last 20 years, we haven't had a recession in farm economics. We haven't had a depression this last 20 years. We've had an outright slaughter. And unfortunately, it's due in part to your policies. Every time I pick up the Wall Street Journal, you're wanting to raise interest rates. And these farm borrowers are huge users of credit, and every time you raise those rates, you just cut them down like ribbons. And you damage them twice in the marketplace by making American goods too expensive and importing and sending cheap imports. He was so upset, and I had to settle him down a couple of times to say, you know, you're going to listen to what I'm telling you here today. And I said, it's like this. If I have a classroom and I have 2 or 3 children misbehave, and I go around and I slap all of them, how long do you think I'm going to maintain credibility? And I said, that's your problem. You are wanting to punish everybody for inflation when everybody is not contributing to inflation. And I would suggest that a very, very large segment of the American public who is deeply in debt, including our government, is not contributing to inflation but being punished for it. This is what he said in response. And so we all think that our national American monetary system is decided here in America. I'm not going to give his name, but this is what he said to me, and he wanted to defend himself. He said, the Fed cannot be sensitive to agriculture in the Pacific Northwest for this reason. All major monetary decisions, the amount of money in circulation and its price, is determined by a supranational committee to which the Fed in the United States must pretty much follow suit. I think this is a quote we had earlier. We'll just go on through. Rural America is the school weakling who continues to be trounced by the class bully. Rural America is sitting wounded and exhausted on its depleted topsoil. Many farmers have difficulty concentrating on building their soils when immediate financial pressures demand mining the soils to exhaustion to sustain unsustainable cash flows. Here's a statement a bank manager made to me. I can no longer approve the loans in my local town because none of the business is cash flow and we can't extend any credit to them. There is no money, just misunderstood process. This is a staggering thought. We are completely dependent on commercial banks. Someone has to borrow every dollar we have in circulation, cash or credit. If the banks create ample sympathetic money, we're prosperous. If not, we starve. We're absolutely without a permanent money system. When one gets the complete grasp of the picture, the tragic absurdity of our hopeless position is almost incredible. But there it is. It is the most important subject intelligent persons can investigate and reflect upon. It is so important that our present civilization may collapse unless it becomes widely understood and defects remedied very soon. 1938. In a nutshell, all currency and all bank deposits come out of the back end of a loan. The only exception is coin, which only represents 1/1000th of the money in circulation. When a loan has run its course and the lender is calling for payment, the currency and dollars created by the loan in the first place have to be gathered up and extinguished to satisfy the loan terms. Being outcompeted for currency and deposits that the American family farm needs for its loans by interests far more powerful than American family farm has been the principal cause of the never-ending chaos in rural America. To understand the economy, one must understand currency and deposits. To understand currency deposits, one must understand loans. To understand loans, one must understand collateral and cash flow. To understand collateral and cash flow, powerful interests have to outflank you and take the money you need to pay your loan. Then you will understand the system. This is a picture of one of our good customers. Just a quick story. He was one of Idaho's best potato growers. He was moving to a very low chemical footprint. His potatoes were of such good quality that the processors used it to blend it with poor quality potatoes. In the end, he was buying chemicals and products from a processor that was also buying his potatoes. They found out that he wasn't buying enough chemicals and potatoes. His potatoes got so good that they could no longer blend him. He lost his contracts. And just one of the many things that contributed to his economic demise. He left in tears as the whole thing came to a halt. He turned the entire operation over to the creditors prior to harvest. And I can tell you the story about that later on. Currency and deposits, as they are processed today, are liabilities. Currency is a liability on the Federal Reserve balance sheets. Checking and savings deposits are a liability on the balance sheets of commercial banks. These liabilities are really intended for repayment back of the loans for which they were created. Their use as a means of exchange is economically absurd. Using liabilities intended for repayment of loans as a medium of exchange can be likened to using ice blocks to build a house in a hot desert. No matter how valiant your efforts, your basic building material is flawed, and your house, life, and nation are always wasting away. America on the path to hunger. Big events always cast a big shadow. 34 million Americans are now food insecure. We did a promotional event for our paper up in Spokane, and we were across the aisle from this Women, Infant, and Children booth that was sponsored by the state of Washington. It was a steady line. There were hundreds of people that came through that line. They got $2 vouchers. Mothers with 2 children under 5 got $40. And afterwards, the president of the market said that 25% of the market's revenues came from just this one social program. Food for Lane County. Lane County is a model poster child of food banks in the United States. In 2004, a number equivalent to 20% of all Lane County residents graced the doors of Food for Lane County for part or a portion of their food. One statement, Pat Farr, who's the director of Food for Lane County, says the biggest problem that he has is when he goes and talks to civic groups and tries to explain that there's hunger, and the people say, well, let the bums get a job. And then he explains most of the people that are going to Food for Lane County have a job, but once they pay their rent and their car, there's not enough left over. Here we see as people go down on the economic chain, they get entangled in these predatory loans. Over the past 2 decades, the poverty rate among working families has increased by 50%. Unable to push enough money out of the back end of their predatory loans to feed themselves, hunger emerges. The types of jobs that are increasingly defining employment means not only more deficit spending by federal and state entities to make up the shortfall, but more capacity from the sector of the public still able to help, and that sector is declining. Ada County, Idaho, I spoke with a captain of the Salvation Army kind of just through an accident of circumstances. Very similar statistic. In 2004, and Ada County is where Boise, Idaho is. It's touted as one of the hot economic spots in Idaho. 20% of all Ada County residents graced the doors of the Salvation Army for help of some type during 2004. And when you add to that the number of people who went to other United agencies, that went to their families first, that went to their religious organizations first, and then went to state and federal agencies, that number could be far north of 20%. These are people in line to a food bank in Seattle, and just to give you a perspective, Northwest Harvest is a food bank's bank. And they get donations from all over the state, and they distribute that food to guess how many organizations and soup kitchens just operating in Washington alone. Over 300. And these people here are lined up. They have one food bank in downtown Seattle. And when you look across the street from that food bank, you're looking at one of the tallest buildings in Seattle, a bank, facilitating the debt dilemma of millions of borrowers scrambling not to be a food bank patron. Incidentally, the Northwest Harvest in Seattle got this statistic from the State Department of Washington. 37% of all school children in Washington qualify for free or reduced lunches. 37%. And most of the older students that are in their teens are too embarrassed about their economic position and won't apply for the free lunches. So that number is north of 37%. Oh my gosh, okay. The central bank sets the model, and money comes out of the back end of the loan. They go through the entire process. The whole banking industry follows the same. Is there a connection between money coming out of the back end of the loan, a lending preference for real estate, collateral, and hunger? A significant portion of the money that America depends to run its economy comes from real estate loans. So, in order to get the money necessary to buy a good portion of the food, we have to pave the land that produces the food that feeds us. Since 1976, America farms on average 2.8 million acres less each year. Urbanized land is now equivalent to 80% of all farm ground. Soon America will have more land in cities and roads than in farming. Typical example, you've got a grain crop here that's been planted. You can't even wait to harvest it. Let's go in and get it. The alarming fact is that foods in America, fruits and vegetables, now raised on millions of acres of land, no longer contain enough minerals or starving us, no matter how much of them we eat. 1936 to the Senate. Dr. Linus Paulus, you can trace every sickness, every disease, every ailment to mineral deficiency. Here is just from the UK, the mineral deficiencies in a number of foods that we eat. Healthcare expenditures have almost tripled as a percent of the gross domestic product in most of our lifetimes. The global land dilemma. 32% of the world's land is in forest. 75% of those forests have already been cut. 21% is totally unsuitable for any farming. 27% is used for pasture. 11%, here's the real hot number, is our farmland. And 9% of the earth has been urbanized. What we don't understand is that now the only place that we can go to get land is to slash and burn the rainforest in South America to make up the shortfall of the land that we're paving here. Another problem we have, water. Huge infrastructure problem. I've numbered the top 3 countries here who are the largest agricultural producers in the world. China number 1, USA number 2, and India number 3. You can see these numbers. Each one of these countries are having major, major freshwater availability problems and depletion. We are living off the production of farmers of almost a generation ago. The red years since 1992 to 93 reflect the deficit years that America's grain farmers, or the world's grain farmers, have produced less cereal grains than what was consumed that year. Just the last 13 years, we have a 264 million metric ton deficit. And here, look who's coming to dinner. We almost have 1,000 more people coming to dinner. If we want to reverse the advanced stages of hunger, the human family is going to have to get a lot more creative than paving its best farmland in order to generate money, liabilities necessary to buy food. I'm just going to flip through these quotes because we've seen them and I'm almost out of time. Let's see here, I can finish up. Where do we go from here? We can no longer separate currency and bank deposit processes from the larger environmental issues such as global warming. Lester Brown, one of the world's most prolific environmental economists, says that for every 1 degree Celsius increase in average temperatures, we can expect a 10% decrease in grain yields. We're already not making it in grain yields. This is just soft white wheat. Sometimes when harvest goes too fast and they can't put it in covered silos, they just dump it on the ground here and then transload it later on. The need for infrastructure to assure sufficient water for food and personal use has reached alarming proportions. The United Nations reported that 30% of the world's people are suffering from major shortages of water. This here is an international destination resort on Jackson Lake. It totally collapsed last year. Wasn't even enough water to put the boats in. The water from here goes for agricultural use to farmers in Idaho. Currency and bank deposit processes are incapable of dealing with the human drama of advanced hunger, water shortage, and global climate crisis. Yet, these are the only tools in place to facilitate human action. The human is in broad philosophical dilemma as to whether it should compromise its future and food by competing over currency and bank deposits, or whether it should rise above its narrowness to embrace a larger, more amicable cooperation. It is time to realize that we are part of something much larger. Generations of the future are begging us to establish a relationship with them. Are we going to hand them a depleted, toxic, indebted, and war-torn planet? These children are trusting that we will do the right thing. The solution? A broader embracing of cooperation, expressing a greater creativity than insecurity and greed as it relates to currency and bank deposits, engaging the larger human family in the discussion of education. The future of food and civilization hangs in balance. Thank you.
I just wanted to make a comment that your presentation was great in outlining the agricultural focus. And once you talk about food and just the basis of subsistence, it really highlights the depravity of our situation. And I wanted to find out if you've ever read the book Progress and Poverty by Henry George, because it really talks specifically about what you've said here today.
Well, that's great, but I've not read the book.
I would highly, highly recommend it.
Thank you.
And another thing was just to ask a question about, I'm doing research right now in Jamaica, which is one of the underdeveloped countries, and their issue with really their farming is in the same predicament. And they're on the other side in terms of the foreign countries not wanting to do trade with them because they're saying that their products are not up to standards because they don't have the fertilizer and all the chemicals that we use to grow our foods. So in terms of the greater cooperation, if they're on the same end where they're not able to have the food they need and to trade, then how, and we're suffering as well in terms of our farmers not being able to produce what they're supposed to be producing, then how, like, where is the gap? Where is it going?
Well, first of all, I think the country's fortunate that they're not using chemicals and fertilizers to create an artificial depletion of their soil and stripping of their country. And I think we have a gentleman in the office here that will be talking later, Charlie Walters. Sustainable and environmental friendly farming means that in order to raise food, most of what you have is already there, and it takes ingenuity. There's a huge split coming in American agriculture. One is that one model says, let's export food, let's move our food from 1,500 to 2,500 miles from our dinner table. And another says, no, let's raise it locally and let's eat it here at home. Their answer lies in them creating their own monetary system that they can trade the resources and the wealth that that country has amongst themselves. Yes?
Forgive me, I don't know the terminology, but when agricultural giants, when they patent seeds,
Yes?
I don't know what the process is called. How does that fit in with this overall picture?
Well, most of the farmers depend on their own seed that they raise themselves to sustain themselves around the world. If you patent the seeds, and those farmers can no longer have access to their own seed, and you just create a few monoculture seeds that make money, you're going to further destroy the diversity of food, which is already incredibly destroyed, and you're going to undermine the farmers who are already try to supply the food for us and make them pay more, become a sharecropper. Let me just point out, it takes 1.25 acres to provide the food and fiber it takes to sustain one person by American and European standards. Globally, that farmland is down to 1/2 acre. In the United States alone, on average, for every 100 gallons of water that we take out of the aquifer, there are less than 70 gallons being replaced. We have an incredible infrastructure need. And even though there's a deficit for the current infrastructure, for those kinds of things that the human family needs coming forward, desalinization of water, moving water around to different parts of the planet, fresh water, and the energy that it takes, that just the upcoming need for money is amazing and incredible. We are so tied up in dealing with inflation that we are tripped up on ourselves. We have to print the money, we have to get the money out, and we have to do something, because right now, literally, we are disintegrating. Any other questions? Yes, please.
Just a comment, maybe, and a question on what we call inflation again. I guess that's a topic here that's of quite a bit of interest. But the Federal Reserve and, of course, the other banks, because all these central banks act in coordination, as one of your slides indicated, says that the reason that they will raise interest rates, and have been doing so now for the last couple of years, is to fight inflation. But I'm wondering if a better word for that action might not be skimming, in the sense that increased economic activity is oftentimes just what another gentleman here referred to as increased velocity, as opposed to increased production. And when that velocity gets going, it's kind of a target for the banking industry to skim its share off of that without appreciably damaging the substratum, so to speak. And in that regard, I'm just wondering if you have any comments about how you see the real motivations of the banking industry when these interest rates go up, supposedly to combat inflation.
Somebody mentioned the earlier author that wrote The Secrets of the Temple, William Greider. William points in there, and I will have some, after we get done, I'll put them on the back. And it shows the bond market debt, which is approaching $24 trillion. And William Greider said that the Fed is nothing more than a puppet of the bond market, because it is the bond market, which is now a huge, huge number, that primarily benefits from an increase in interest rates. Because it is the largest debt segment of the aggregate debt, it is the largest beneficiary. So when you raise interest rates, you're basically passing money from the debtor to the creditor. Now, how that's got to do with inflation and what that's got to do with the world of reality is still beyond me. But that's his quote, and I would say that there's some validity there. Simply, if you have any kind of concentration at all in that bond market, you've got a very, very powerful incentive to find inflation, to scare people with inflation and raising interest rates. Okay.
Oh,
Please.
okay. My question is just to what extent is the shift in a really animal-intensive agriculture exacerbating this problem?
The hunger problem?
Where I don't know if this is a factor, but okay.
Yeah.
Resources.
It's hard to quantify, because many times this pasture feeds livestock on land areas that you couldn't do anything else with. But roughly, it takes 2 to 3 pounds of feed to convert into 1 pound of chicken, 3 or 4 pounds of feed to convert into 1 pound of pork, and maybe 6 to 8 pounds of feed to convert in 1 pound of beef. Now, Susan and I, we just drove here. We drove for 10 hours passing corn and soybean fields. That's all there was. It was pretty monoculture, and it was real disappointing. Primarily, that goes to livestock feed. So, yes, there may be some efficiency if the human family eases up on its meat diet for a more direct grain diet in terms of feeding numbers. The problem that we have is that the grain that we raise comes off such depleted topsoil that while it may be something that we put in our stomachs, we're not really being fed. So we've got a double dilemma, not only switching to food that may put something in more people's stomach, but also the quality of that food. Yes.
I was very deeply moved by your presentation of the condition that we face in the world I myself have been focusing on that condition for many years, and it seems overwhelming. And when one is confronted with it, the power of that almost short circuits the mind. We don't know what to do. And you recommended creativity and cooperation and education. I wonder if you also have thought in terms of examining, I know from your presentation you've thought in terms of examining the global economic system. How about the nation system, the nation-state system, a world divided into 191 so-called sovereign nations, which each of which has their own problems, and each of which cannot perhaps survive these problems that you're talking about without some form of cooperation?
The problem lies within ourselves. We approach economics like we do a football game. So that means the winner takes all and the rest starve. So every morning we get up and we go through these processes. We're bowing down to Wall Street from morning till night instead of backing up and cooperating and helping each other. So the question really is, do we move from an economy that's conceptually based in cooperation, or do we stay in an economy that's conceptually placed in competition? And there are many, many nonprofit organizations and a lot of things that are going on, particularly infrastructure, where it suggests that we move more dramatically into something that's based on cooperation instead of competition. Yes, sir.
Ben, I just wondered if you had any experience with the effects of the genetically modified effects on the corn and feed that is given to cattle.
Yeah, the whole thing's sick. And basically genetically modified foods, how do you get a gene that isn't supposed to be there in there? You have to invade the cell. And I know out here these, for example, this is just one example. Corn stalks from genetically modified corn break down less easily than other corn. And so you're starting to have problems both in the cultural practices. The other thing is allergy to that. And the biggest thing is for these multinational companies to follow the food that they've genetically modified, they have to put a tracer gene in there, which is an antibiotic. And so now what we've got is antibiotics coming with the food that we eat. A very big unknown and a very big concern for the medical profession and particularly for consumers.
This will have to be the last question if there's any more questions.
Okay. I've got my.
Oh, okay.
There's a sort of side issue in here in terms of the cooperation end of it. The institutions that are known as cooperatives, and particularly farm cooperatives, really act more like corporations in the very conventional sense. In effect, there's a counterfeiting situation there as well. In terms of, once you start talking about cooperation, they'll stand up and say, oh, but we're a cooperative. But they function very much like a conventional corporation. In other words, they're also bought into the very conventional economic assumptions that go down the line from there. Can you address that in terms of how do you get from one back to the other?
Sure. A cooperative, when you look at their balance sheet, in fact, we just did a story on one of the largest cooperatives in the Northwest. It was a food store, PCC Natural Foods. And you look at their balance sheets, and guess what? They don't have any debt. And there are no stockholders. So that means that the revenues that the company generates, even though it generates and it has to survive in the economic environment it's in, it has a lot more to give back to its owners in terms of quality food and its employees in terms of compensation, because there aren't these other two drains to it. So yes, even if it has to function in the current monetary economic system, the fact it does so with a whole lot lighter load means there's a whole lot more to give back to our society. Yes.
In Peoria, Illinois, a large ag industry located there was found to have rigged the prices of food grains. Are there any more of that going on right now, or suspicions?
Whenever you have a monoculture and you get a lot of one commodity in a pool, whether it's corn, whether it's wheat, or whether it's milk, you invite speculation and it goes downhill from there.
Thank you very much, Ben.